Okay, Swissy, let's get through this. Swissy, again, now this is interesting. We've got price direction up on the daily chart, and we've peaky booed below the demand. So, but we're consolidating here, which is, well, it's not bullish. But since we've got price direction up, we could look for potential long today, like here. And that may be interesting. So I may look for that. Price direction is up on the daily chart, currently down on the 4 hour, but let's assume it goes up on the 1 hour. It's one of my favorite settings, setups, especially after a big move down. We've got direction up on the daily, just peaky boo below demand, peaky boo below here. It's going to have a move to the upside, and it's been consolidating or changing of the guard, if you want to call that. Like if it's going to go up, this is where the institutions are maneuvering. Here's a clue, this bar here, and the fact that we're not going back below. This is the bottom for now, and we've got room to move. So this is looking interesting. And we'll look to target this area, the area above the supply area that hasn't been touched. Well, I suppose it has here, but we'll target this area as the first one. Maybe 95. We're at 94.05. We're about 100 pips. And potentially up here, if we go higher to 96, we've got maybe 200 to 200 pips potential from here. And you can get in here with a stop below there at 93.50. It's actually quite a big stop. It's like 50 points. Or you can just put it below here, which is a bit tighter, about 20. I prefer probably put it. It's worth a try. And we'll just have a look at that. So this one is pointing down, but up on the daily between supply and demand. And the downside to its basing here, the upside to it is we've got first time up and a big drop down. So we're due for a little bounce. And you can see from here to 96 could be where it goes, which is the demand that we just broke here. So we're probably going to bounce back and then go lower. Or we don't go higher at all. But this may be if we close up at the top of the hour. Still a bit more time, but this may be currently neutral, but neutral to long bias. I'll let this for a bounce, and we can get a very nice reward to risk it. So this may be one to try, especially if we start getting the dollar moving up as well, which is maybe what's going to happen here. We've put in a higher high, so maybe a higher low. This is on this time frame. Higher high, pull back, we're in demand here. So after big drop down, 2 demand levels. So we've had the big bounce up, stop. This is kind of the head and shoulder inverse. Head and shoulders, the head, shoulder. Maybe we get another shoulder here, kind of lopsided, but whatever. That's the idea. It's potential reversal, or remember, bigger picture. The dollar's probably going down, but we're in an area now where we're going to bounce, even if we do go lower afterwards. It looks likely. So we'll see, this was a trade from yesterday. Remember what we said yesterday? We said, we're probably going to bounce here. Don't take a short, wait for price direction to go to the upside, then trade a pullback. You see from 9 o'clock, the pullback. And if you go down to 9 o'clock, let's go to yesterday. 9 o'clock, you see the entry here, so it's 8:50. This is 9 o'clock, so you wait for a pullback. Could have got in here, could have got it in here. I just took it on the close of the hour. So I mean, I would have got a better price. I would have got about 7 pips better, or even have got in down here, maybe even 20 pips better. But I got in just on the hourly chart, and then you just hold it. The first target was, and it took a long time to get there, and we did have another move down, but who cares? Just let it go. And we're probably going to get to our next target. So this was the first target. Let me show you the picture of this so you know. I took this trade. And we talked about the 2 targets, remember, yesterday. So this was an example of a trade that's set up after our session, which you could have taken. And the first target was here, and the second target's up here, the next level, which may get to today. I mean, look at what's happening here. We talked about the move down here, getting into this demand level below this demand. So it's kind of a trap, anyone selling below there. And we talked about the downside of going on, the fact that it based, but the upside, in fact, that this demand level. So let me show you that. This was the trade. So I took it here. I remember the first target here was 0.9490, and this is the second target. So we got the first target, and again, look at the stop here is pretty tight. And first target is kind of nice. We're talking about, I got in at 0.9420. That's kind of what I got filled at. And first target was 70 pips, and the next target's another 100 from there, and very small risk. So that's that trade. So here you can see that was a market when I took the trade, and now you can see, if you can see it here, it was basically getting in here, and you can see that was the first target area, 0.9490, just before the area. You can see what happened. It went spiked up. I don't need to get the exact high or low or whatever. I just need to get out, and you can see I got out like here, 0.9490. That's most of the first move. So I can let's take a picture of it. And these are the type of trades, especially these are swing trades, because they're coming from the bigger time frame, trading on the daily chart. And let's put this in here. You want to you don't need to watch them every 2 seconds, you just let it go. And that's the beauty of that style of trading. It's like set and forget if you want, and you don't have to be too kind of, it takes all of about a few minutes to take the trade and set everything up, set your targets up, and just put your stop in and just leave it and let it go. Let's go down here. Okay, so you see again, entry. I'll do the entry here. Let's see, here we go. So entry is kind of here, and this is 0.9. That was target 1. Q1. So you've got a picture now of your entry, the picture of the trade. If you look at the picture when it was taken, you see where we were targeting, you see where we got in, see where the stop is, and then you've got a picture of how did that trade play out. Well, there you go.